so we talked about some examples of repairs versus improvements. Now we're going to dig into the actual question that came in again. So to refresh, when a tenant moved out, the property owner had to replace several items due to damage. Floors, doors, painting, wall repairs. Are all of these expenses deductible? You're probably going to have to dig in to get a little bit more information. Because remember, when we talked about improvements, we talked about something that enhances a property's value or extends its useful life. So when we're talking about flooring, when were they installed? Were the floors 10 years old, or were they just installed 8 months ago before the evicted tenant moved in? Right? Floors have a much longer useful life than 8 months. So if the tenant did enough damage beyond normal wear and tear, they did enough damage that the carpeting has to be replaced, then it probably can be treated as a repair instead of an improvement. However, if that carpet was 8 years old and it was due to be replaced anyway, then it might not be treated as a repair. So facts and circumstances do matter, even with all of the detail that these other code sections and treasury regs detail. I would have the same question for the doors. You would not expect to replace doors in between each tenant or even in between every 5 tenants, right? Doors generally last a pretty long time. So I would want to know, were these the original doors? What kind of damage was done to the doors? Were holes punched in it? Why did the doors have to be replaced? So you might have to dig in a little bit more. If the tenant, and I'll tell you, I've seen some properties left in horrible condition with some of my real estate owning clients. And when I was house shopping, some of the houses I was looking at were foreclosures, and the things that people do to these houses on their way out is unbelievable. So in this case, it could be that there were literal holes punched through the doors. In those cases, I would argue that replacing that door is a repair, not a capital improvement. You have to have doors. They have to be in proper working order. They can't have holes in them, right? Painting. So if it was just normal painting, like they paint in between every tenant, then it's routine maintenance. And we haven't touched on routine maintenance yet. We'll talk about that in a minute. Unless they did something significantly different. Like if this tenant moved out and they're like, oh, we're going to paint anyway, we're going to take this opportunity to do something completely different to the wall coverings. Maybe they installed some fancy wallpaper or something. So you have to look at, were they just painting because they normally paint in between the tenants, or they're painting, in this case, they don't normally paint in between each tenant, but this tenant did so much damage to the walls, they had to do so much repair work that they had no choice but to paint. Going to be a repair. Wall repairs, again, patching, nail holes, like patching holes up to, say, a quarter size, routine maintenance. You expect to have that. You expect your tenants to hang things on the walls. Unless you're like me, in my office, I have stuff hung, but in the rest of my house, I don't have anything on the walls. I was too lazy to put it back up after I painted, so there are no nail holes anywhere. But people like to make their apartments feel homey, or their rental houses. So if we're talking about, repairing nail holes, the occasional, I don't know, somebody punched a wall and put a hole in it, those are generally going to be routine maintenance, though it can be treated as a repair. In both cases, there are going to be smaller repairs. If they're doing full wall repairs, like whole entire sections of drywall or moving walls, then it's more likely going to be an improvement. So even with having some fairly defined criteria, there's still a lot of nuance in figuring out whether it's a repair or an improvement. And then you throw in routine maintenance. So let's touch on routine maintenance for just a second, or we'll actually touch on that in a minute. We framed this discussion by me saying they're trying to determine if all of these items can be treated as a repair and deducted immediately in the current year, or if they're treated as an improvement and have to be depreciated over the useful life. There are other options. There are safe harbors. Our tax folks, people who write the tax code, love to throw in some safe harbors. We talked about this. We talked about some of these during my STR course, and I'm sure it's touched on in the course that Andy tagged in the chat. So the first one is the safe harbor for small taxpayers. You might see the acronym SHST. It allows landlords to deduct so by currently deduct, we mean in the current year, all annual expenses for maintenance improvements or other costs for a rental, but of course there are limitations. It's got to be a building that cost $1 million or less. So it's not going to be a $2 million property. That property won't qualify. And then it's limited to the lesser of $10,000 or 2% of the unadjusted basis of the building. Unadjusted basis means you don't have to factor in the depreciation. So let's say the building's unadjusted basis is $250,000. The limit is going to be $5,000 instead of $10,000. It's going to be the lesser of. So up to $1 million. So the house would have to have been $1 million to qualify for the full $10,000. One important note is that it's applied to each home separately. So if your client, in the case of the person we were just talking about, their client owns 7 houses, this is going to be applied to each property separately. That $10,000 limit is applied to each property separately. So it is possible to exceed that $10,000, but only if they have multiple properties, right? So each property, the limit gets applied. So that one can be a pretty powerful tool because in this safe harbor, it doesn't matter if the thing should have been an improvement and should have been capitalized. It doesn't matter. As long as it's under that 2% of the unadjusted building basis, they can write it all off in the current year. Routine maintenance safe harbor. This is a big one if you have rental property clients. So routine maintenance is recurring work the landlord does to keep the building and each system in proper working order. Think of routine maintenance as proactive and repairs are reactive, right? Routine maintenance, you're trying to keep things from breaking. You're trying to prevent them from breaking. Repairs, you're fixing things that have already broken. So routine maintenance includes things like inspection, cleaning, and testing. So if you have a quarterly maintenance agreement on the HVAC system, the HVAC company is going to come out, they're going to check the system, they're going to inspect it, they're going to clean it out, they're going to test it. That's routine maintenance, that's automatically expensed. Replacing of damaged or worn parts with, this is important, with comparable and commercially available replacement parts. I mean, there are no systems in my house that are fancy enough that the parts are not commercially available for replacements. I don't have fancy things, and I also don't have antique systems in my house anymore. Everything that was old has already broken and been replaced. But so if it's replacement of damaged parts, and that is especially important if it hasn't actually broken yet. It's a worn part. Like when during the inspection, they see that some component of the HVAC system is looking really worn. It's getting pretty old. We're worried it's going to break soon. So they go ahead and replace it proactively. That's routine maintenance that gets expensed.
Thanks so much for joining us. We really hope this session was helpful for you. If you enjoyed this and want more support on your tax professional journey, consider joining one of our Pronto Tax School memberships. As a member, you get to join weekly live mentor sessions just like this, access tons of advanced tax courses, be part of our private member groups, which is great for networking, grab special discounts for our live events, and even get tax business growth coaching. There's a lot packed in. Check out the links in the description to see the details for our Dream Team and Forever Edition memberships. We'd love to have you join our community.